Hello, everybody. Welcome to Thursday. The S&P 500 was down almost 0.9% today. Really want to take this chance to answer a question, why is the market so afraid and what is it afraid of? We've got a situation where, for example, today, first-time unemployment claims, which are reported each week, came in at better than expected. So we have less people applying for unemployment. We have more new jobs created after the last jobs report that came out on Friday, et cetera. We've got, earnings that did better than expected, all these things. And so why is the market coming down here? And what is the market worried about? And the market is worried about the Federal Reserve raising rates too far. And one of the problems for the Federal Reserve is, first of all, they've done that in the past. We had roughly 19 rate increases before the 2000 downturn and 21 rate increases before the 2008 downturn. You can make a strong argument that they went too far in both of those cases. And so the market's afraid that they might be doing this again, especially, unfortunately, exaggerated by the fact that we have all these Fed governors coming out like today and doing interviews talking about raising rates more, staying up for a longer period of time. And the market's worried that maybe the Federal Reserve really isn't looking at the data and that we might end up having, a situation where the Federal Reserve kicks us into a deeper recession. Now, I will say that, in the Fed's defense, it's a very difficult job. And most of these situations where we're seeing these interviews come out over this week, especially, have been the Fed governors coming out. And so, Chairman Powell has been much more measured, and I think much more accurate in what he's saying from what I'm seeing altogether. And he does have a tremendous amount of authority as to what they actually do with interest rates. But the market is looking at this and saying, wow, we might be going to 6%, on the Fed funds rate instead of 5.25 or 5 or those types of things. And that was kind of the bet today. And if that happens, maybe there's some type of big downturn that happens. So, things can be going really well. The numbers can be looking good. Earnings can be happening and what have you. And the Federal Reserve can mess it up. They've done it before. So we do have to pay attention to that as far as that goes. And, we're close with this particular downturn to wanting to pull a little bit of our, portions off the table and get a little bit more defensive. Just wait to see how this plays out. But in the end, again, the hope is that the Federal Reserve looks at the data like they have so far and stops raising rates at some point in time to let the interest rate increases that they've already done kind of take effect with the economy. They're usually, 6 to 12 months before they really start to hit the economy. And so we can see how this plays out. Because if we look at the data and you look at interest rates, and you look at what's happening with inflation and all these things are not that bad at this point in time. It's just really this kind of fear of what the Fed might do in terms of that. So we'll keep an eye on that. We'll see how that goes. Right now, they're just talking. Part of that talk is to bring down the market, and maybe they don't actually do what they say they're going to do. We'll see how that plays out. But look forward to talking to you tomorrow. Thank you very much.